Well, first of all, you can characterize Bitcoin as a digital currency. You can call it digital gold. You can call it digital cash. You can think of it as digital money. You can think of it as digital property. You can think of it as digital capital. You can think of it as digital energy. You can think of it as a digital asset.
Welcome to this market update. Today we delve into a crucial aspect of the Bitcoin and cryptocurrency world, liquidity, specifically banking liquidity and bank reserves. These elements ebb and flow, significantly impacting cryptocurrency valuations. Understanding our current position within this cycle is key, especially with ongoing concerns about inflation. However, it's important to recognize that for Bitcoin, traditional inflation worries may not hold as much weight. But let's watch first Michael Saylor.
And it spawned out of the quote-unquote cryptocurrency industry. So a person on inspection, if you've heard about it for a few minutes or an hour, your immediate reaction is cryptocurrency. Crypto is some kind of digital something. And currency, it must be a currency. And people go back and they say, well, it must be a currency because the front page of the white paper said a peer-to-peer, electronic cash system. And so most of all the debates and the criticism in this entire industry are just about semantics and words and interpretation of words. And oftentimes people will just hear one of those words, and based upon their life experience and what they learned in school or what they've learned in business, they will immediately come to a conclusion, which is either an economic opinion or a political opinion or an academic opinion, without first stopping to discuss what the words mean and even if the words are relevant. For example, peer-to-peer. Well, what's a peer? Well, a Bank of Japan is a peer of Bank of England, right? So maybe Satoshi meant it was a peer-to-peer system to move a monetary asset between the central banks or between commercial banks or between Apple and Google and corporations. And if you interpreted the peers as megacorps, mega commercial banks or countries, you would have a different view than, peer, that just means a consumer like me, and I want to send $5 to my friend, and that means Satoshi meant Bitcoin was to send $5 between 8 billion people, peer-to-peer, right? And of course, if you think the latter, you have a totally different opinion of whether it works or doesn't work, versus if you think the former. So what's the definition of peer? Now, what's the definition of cash? Well, a lot of people think cash is the dollars in their pocket or the fiat currency, $5 bills or $20 bills. And so they think peer-to-peer digital cash. Okay, well, I want to send $20 bills from person to person to buy coffee because that's what I do with $20 bills. And so then it becomes a big debate. Well, obviously, it's not very good for buying coffee. A billion people can't buy coffee with it. It keeps changing in price, so it must not be a success. But of course, that hinges upon you redefining cash or defining cash as fiat currency in small denominations. But of course, when the King of Spain wanted to finance the war in the Netherlands, he sent a fleet of ships with a bunch of gold in their holds to pay for the entire war effort. That was cash. That fleet washed up on the shores of Queen Elizabeth. She stole the gold. It bankrupted the Spanish-Netherlands war effort.
In nations experiencing severe inflation, Bitcoin has reached unprecedented highs. It appears that Bitcoin's value is less influenced by inflation and more by the actions of central banks and their manipulation of currency. Recognizing a rise in currency units can signal a positive shift for Bitcoin prices as more units chase a fixed supply of BATRA. We'll explore the current reactions to these dynamics throughout this video. Currently, we're observing a pullback from peak prices, which is more of a market correction or consolidation than a downturn. Notably, Bitcoin once hit $57,000 and might retest this level, providing a potential rebound point. Another critical level to watch is around $50,000, which would represent a significant correction, a potential buying opportunity for many, including myself. Despite recent dips, the market trend is overwhelmingly positive, showing strong signs of a bull market with consistent higher highs and lows. Data indicates a resurgence in M2, suggesting an influx of currency units pursuing the finite quantity of BTC, which traditionally signals bullish conditions despite inflation fears. For traders, there are opportunities to leverage such market conditions. New users can take advantage of offered on platforms like Nexo. Check the link below for details on how to get up to earn 16% per year and check crypto card with 2% cashback. Looking at Bitcoin's valuation, two primary factors drive its price. The first is its inherent adoption. Its value stems from its desirability and utility to users. As adoption grows, so does the valuation. The second factor involves the volume of currency units in circulation. An increase in money supply without a corresponding growth in goods and services typically leads to asset price inflation, making Bitcoin an attractive hedge. We witnessed a vast expansion of currency supply during the pandemic, leading to a bull market as assets adjusted to the new currency volumes. However, post-expansion, the market corrected, indicating that we might be entering another period of liquidity enhancement. It's crucial to understand that banks generate money through credit creation, which involves risk. The central banks play a significant role in this, influencing the rate and extent of credit, and thus currency creation. We're starting to see these dynamics shift again, suggesting a possible return to more aggressive monetary policies. The velocity of these changes matters. While we've experienced a downturn in Bitcoin prices, the signs are turning positive again. Historically, Bitcoin has been ahead of the curve, reacting swiftly to changes in monetary policy and banking crises, suggesting its role as a leading indicator rather than a follower. Bitcoin has historically anticipated shifts from negative to neutral or positive trends in system liquidity. This predictive capability makes it an essential asset for those looking to hedge against traditional economic indicators, which often lag behind real-time events. Currently, Bitcoin is in a typical market cycle correction, down 2025 from its all-time highs. While significant, this is not unusual in the volatile crypto market. However, this doesn't signify the onset of a bear market, but rather a mid-cycle adjustment. Historically, Bitcoin markets don't peak once and plummet. They undergo several cycles of spikes and corrections within a broader bull market trend. We're likely in the midst of such a phase, indicating further potential upward movements over the next year or so. For investors, understanding these patterns is crucial. For those more sensitive to price fluctuations, it's advisable to buy on dips rather than pursuing constant accumulation. For others, a long-term hold strategy might still be appropriate, given the ongoing growth in both adoption and currency supply. The dual forces of increasing adoption and currency expansion are likely to continue driving Bitcoin's price. As we navigate these dynamics, it's vital to stay informed and strategically positioned within this evolving market landscape. As Michael A. Arowet says, "That's the most scary chart I have seen in a while. Unfunded pension entitlements in major European countries between 300 and 500 of GDP. Mixed with collapsing demographics, it's a recipe for debt disaster." What is your thought? Is scary situation or no? Let me know. See you the next episode. Out.